Geopolitics has continued to dominate headlines. There's a lot of uncertainty. We still have a view that is constructive for risky asset looking at the next 12 months. There's two key arguments that we have that is underpinning our tactical view. The first one is that we do expect a gradual de-escalation in the Iran-US conflict. And the other argument is that we believe that the US economy should remain resilient, able to absorb the oil price shock. We do expect a de-escalation in the Middle East because all parties have strong incentive to avoid a prolonged escalation. The US would be facing, in the event of a sustained escalation, higher commodity prices, higher inflation, and weaker growth ahead of the midterms election in the US. For Iran, there will be a cost of an escalation because the regime is concerned about its survival. The regime still has a lot to lose from a sustained escalation, especially in a context where China doesn't have an incentive for a prolonged escalation because that would weaken global growth, and China is a key winner of global growth remaining on a healthy path. So all sides have a strong incentive to avoid a prolonged escalation. It means that we believe oil prices, Brent, will average about $90 over the course of the next 4 quarters. In the near term, oil prices will likely remain above that mark. We think that the oil shock itself is going to reduce global growth by 0.3 percentage point. That results in a global growth outlook of about 3%, which is not bad. And so we have a shock that is manageable, a global growth outlook that should remain resilient. So that's perhaps the key word, resilient, and a global economy that will remain supported by unique factors that we typically don't see in a late phase of economic expansion. So we have strong inelastic demand for military investment. We have also AI, the buildup of data center that should remain a tailwind, but also we have other emerging thematics that should bring new tailwinds, such as robotics, for example. There is also a consumption phase to the tech cycle, which is taking place. And that cycle historically has been a key contributor of global growth. And we think that this cycle is alive and well. And so this is something that is constructive for emerging markets, especially in Asia.